Hey everyone, welcome back to Corporate Decoder, the place where we decode the corporate world. Today, we're diving into WEX Inc.'s recent filing, and let me tell you, it involves a lot of numbers and some interesting financial maneuvering. It's like watching a magician pull a rabbit out of a hat, but instead of a rabbit, it's millions of dollars in debt. The big news is that WEX just announced that it's raising more money than they initially planned. They're selling $550 million in new notes, which are basically IOUs that promise to pay back the money, with interest, in the year 2033. Initially, they were only looking to raise $500 million, so they increased the offering by $50 million. Think of it like going to a bank for a loan, but instead of just one bank, they're getting money from a bunch of investors. Now, this isn't your typical public offering where anyone can buy these notes. It's a private offering, which means they're only selling them to certain qualified investors. The offering is exempt from registration under the Securities Act, meaning they didn't have to jump through all the regulatory hoops that usually come with selling securities to the public. It's like having a VIP pass to a concert only for big money investors. These notes are being offered under what's called Rule 144A of the Securities Act to qualified institutional buyers. And outside the US, they are being offered to non-US persons in compliance with Regulation S. To get a clearer picture, we can look at the official announcement that WEX put out in their press release, which is attached as an exhibit to the filing. This gives us the details about how they're pricing these notes, the interest rate, and all that good stuff. So, who is WEX anyway? Well, according to the report, WEX is a global commerce platform. Basically, they help businesses manage their money and simplify all the financial tasks of running a business. They specialize in benefits, mobility, and payments. Think of them as the behind-the-scenes financial wizards that make sure everything runs smoothly. WEX is actually listed on the New York Stock Exchange under the ticker symbol WEX. Now let's talk about the future, but with a grain of salt. This report contains what are called forward-looking statements. That means WEX is making predictions about what they think is going to happen with their business, and they're using words like anticipate, expect, and plan. But they also warn that things might not go as planned because there are risks and uncertainties involved. It's like saying, we think we're going to win the game, but anything could happen. WEX is not promising to update these statements in the future, even if new information becomes available or events occur that change their outlook. Now for a broader look at the company. WEX seems to be making a bold move by taking on more debt. On one hand, it shows they're confident in their ability to generate revenue and pay it back, especially with the interest rate on these notes set at 6.500%. On the other hand, debt is always a risk, and if things don't go as planned, they could find themselves in a tough spot. The fact that they upsized the offering from $500 million to $550 million suggests there's strong demand from investors. That's a good sign for WEX, as it shows that people believe in their vision and are willing to put their money behind it. One potential risk for WEX is the overall economic climate. If the economy takes a downturn, businesses may cut back on spending, which could impact WEX's revenue. Also, changes in regulations or increased competition could also pose challenges. Looking ahead, WEX has the potential to continue growing and expanding its services. Their focus on simplifying the business of running a business is a valuable one, and as more companies look for ways to streamline their finances, WEX could be well positioned to capitalize. In conclusion, WEX is making a calculated bet on its future by taking on more debt. While there are risks involved, the company seems confident in its ability to execute its plans and continue growing. It's a company to keep an eye on, especially if you're interested in the world of corporate finance and how businesses manage their money. Thanks for watching. If you found this breakdown helpful, please like, comment, and subscribe for more corporate deep dives. What companies do you want me to analyze next? Let me know in the comments.